Europe is getting older, much older. Birth rates are falling, life expectancies are rising, and entire populations are shifting into retirement age. On the surface, this looks like progress. People are living longer and healthier lives. But beneath that success lies a growing crisis. Crisis affecting pensions, healthcare, family structures, and the entire financial system. And in the middle of this massive demographic shift, something interesting is happening. Life insurance, once seen as a tool only for young families, is becoming a key part of retirement planning. Today, we're going to explore how Europe's aging crisis is reshaping life insurance, how retirees are using insurance like never before, and what this means for the future of money, family, and aging across the continent. To understand what's happening, we need to start with the numbers. In countries like Italy, Germany, Spain, and France, the number of elderly citizens is growing faster than the number of young people. Some European countries already have more people over the age of 65 than under 15. In the past, retirements were funded by strong pension systems supported by large working populations. But now, fewer workers are supporting more retirees. The entire retirement model is being pushed to its limits. For decades, many Europeans believed that the state would take care of them. Pension systems were generous, healthcare was widely available, and family members lived close by. But today, these foundations are weakening, and people are searching for new ways to protect their future. That's where life insurance enters the picture. Traditionally, life insurance was designed to replace income for young breadwinners. It was something parents bought to protect their children if they died early. But in an aging Europe, the purpose of life insurance is evolving. Today, more people over the age of 50, 60, and even 70 are buying policies not for income replacement, but for inheritance planning, tax benefits, healthcare preparation, and long-term financial security. Instead of only protecting the young, life insurance is now protecting the elderly from financial uncertainty in old age. An important shift is happening. Life insurance is being viewed not just as a payout after death, but as a living financial tool. One example is using life insurance to cover inheritance taxes, something especially common in countries like France, Germany, and Spain, where estate taxes can be extremely costly. Instead of leaving their heirs with tax burdens, retirees use life insurance so their children inherit money tax-free. Another trend is using insurance to supplement reduced pensions. As traditional pension systems shrink, retirees are turning to life insurance products with cash value components to create an additional income stream later in life. This is a dramatic cultural shift. Europeans who once relied almost entirely on public support are now turning to private solutions. We also can't ignore the role of families in this crisis. In the past, aging parents in Europe often lived close to their children, or even in the same household. Caregiving was expected. But modern life has changed that reality. Young people are moving to cities or even to other countries, and families are becoming smaller. With fewer children to rely on, older Europeans are trying to build financial independence. Not to pass on wealth, but so they don't burden their families. Life insurance is becoming a tool to maintain dignity, independence, and stability in old age. One of the most surprising changes is how insurance companies are adapting. For decades, insurance ads focused on young parents, newlyweds, and first-time homeowners. But now, companies are targeting seniors with products specifically designed for late-life needs. Policies with guaranteed acceptance, policies that fund long-term care, and policies that release cash value while the policyholder is still alive are becoming common. In some countries, insurance is even replacing nursing home plans. Instead of relying on state-run care, people are funding their own future through private insurance. It's a dramatic reconstruction of financial responsibility. There's also a psychological dimension to all of this. The idea of retirement has changed dramatically. Retirement used to be a time of rest, simplicity, and staying close to family. But today, many retirees want independence, travel, and freedom, and they don't want to run out of money while doing it. At the same time, they know government systems may not be able to support them forever. That anxiety is pushing people toward insurance as a way to secure control over their future. They aren't just buying a policy, they're buying peace of mind. The biggest question is whether this shift is sustainable. Can insurance companies really take on the burden that pension systems once carried? If retirees live into their 90s, will these policies still hold up? Can the private sector solve a public demographic crisis? Some experts argue that life insurance is becoming a temporary bandage for a much larger issue: the imbalance between young and old. Without more workers, higher birth rates, or major immigration, the economic pressure will continue to grow, and life insurance alone cannot fix that. Others argue that this shift represents a healthy transformation. Instead of relying entirely on the government, aging Europeans are taking financial responsibility into their own hands. Life insurance becomes a tool of empowerment, not just emergency protection. But one thing is clear: retirement in Europe will never look the same. The old formula of work for decades, retire with a state pension, and rely on family support is fading. A new formula is emerging, built on private savings, flexible financial products, and insurance-based planning. This change is not just financial, it's cultural. It reflects how people see aging, independence, and responsibility. And it forces us to ask a bigger question: what does it really mean to age well in the 21st century? The story of Europe's aging crisis is not just about numbers and economics. It's a story about how societies evolve. It's about how people redefine family roles, trust, and the meaning of security. And it's a story that goes beyond Europe. Countries like Japan, South Korea, and even China are experiencing similar demographic shifts. In many ways, Europe is just a preview of the future, and life insurance is emerging as one of the most fascinating tools in the response to that future. So as the continent ages, as pensions shrink, and as populations shift, life insurance is stepping into a new role, not only as a safety net, but as a retirement strategy, a tax shield, and a symbol of financial independence. Whether this shift becomes the solution or just a temporary fix is still unknown. But one thing is certain: the way Europeans think about aging is changing, and life insurance is right at the center of that transformation.